The four most dangerous words in investing are, "This time it's different." Sir John Templeton. Every generation believes they've finally beaten the rules. The dot-com investors believed it. The housing market believed it. Crypto believers believed it. And today, AI investors believe it. But here's the scary part. The real disaster isn't a stock market crash. It isn't inflation. It isn't even a recession. The economic disaster nobody talks about is what happens before the crash, when everyone becomes convinced risk no longer exists. Let's travel back to 1972. There was a group of companies called the Nifty 50. People thought they were perfect businesses. Coca-Cola, IBM, Polaroid, McDonald's. The slogan was simple. Buy them at any price. Sound familiar? Today, replace Polaroid with NVIDIA. Replace IBM with Microsoft. Replace Xerox with Apple. Same story, different decade. Investors weren't buying companies. They were buying dreams. And dreams usually get expensive. Very expensive. The Nifty 50 traded above 40 times earnings. Then reality showed up. Many of those stocks lost 60 to 80%. Not because the businesses disappeared, because investors paid ridiculous prices. History didn't repeat itself. It rhymed. Now let's look at today. 7 companies: Apple, Microsoft, NVIDIA, Amazon, Alphabet, Meta, Tesla. Together, they make up roughly 35 to 36% of the S&P 500's total value. Think about that. 7 companies, carrying an index of 500. That's like one engine trying to pull an entire train. Now look deeper. NVIDIA's revenue exploded. Its profits exploded, but its valuation also exploded. At various points, investors valued it at well over 40 times forward earnings. That's not automatically wrong, but it means expectations are sky high. One disappointment can feel like gravity suddenly remembered it exists. Meanwhile, U.S. government debt has climbed past $37 trillion. Interest payments alone are now over $1 trillion per year on an annualized basis. That's money that can't be spent elsewhere. And central banks, over the last few years, they've been buying huge amounts of gold. In 2023, central banks purchased more than 1,000 metric tons. Why? Because even the biggest institutions like insurance, when the smartest players quietly buy helmets, maybe they're expecting a rough game. So what does this mean for you? Should you sell everything? No. Should you buy everything? Also, no. Here's the problem. Most people confuse a great company with a great investment. They're not the same thing. Apple is an incredible company. Microsoft is incredible. NVIDIA changed an entire industry. But even amazing companies can become terrible investments if you overpay. It's like buying a Ferrari for $5 million. Still a Ferrari. Terrible deal. Markets today feel like someone who drank 6 energy drinks and is convinced they're invincible. Everything works until suddenly it doesn't. Nobody rings a bell at the top. The market simply runs out of buyers. The bigger economic disaster. Here's the disaster nobody talks about. It's not unemployment. It's not inflation. It's not AI. It's the slow creation of false confidence. People stop saving. Companies borrow too much. Governments spend too much. Investors chase yesterday's winners. Everyone assumes someone else will pay a higher price tomorrow. Until one day, they don't. That's how bubbles end. Not with explosions, with silence. One buyer disappears, then another. Then everyone rushes for the same exit. The gray area conclusion. Visual, sunrise over a city, calm music. Does that mean a crash is guaranteed? No, nobody knows. Markets can stay expensive for years. AI could genuinely transform the global economy. Corporate profits could keep growing, or reality could catch up much faster than anyone expects. That's why investing isn't about predicting the future. It's about surviving it. Diversify. Avoid debt you don't need. Question popular narratives. And remember, the goal isn't to be the smartest person in the room. It's to still be in the room. 10 years from now. Because fortunes aren't built by predicting every headline. They're built by managing risk while everyone else is chasing certainty. And that's the economic disaster nobody talks about.